The 15-minute chart is the best chart to trade on if you're a new trader, in my opinion. But let me tell you why. So first and foremost, my name is Forrest. I invest in stuff I think that you should too. I'm focused on helping you become a better trader, teaching you how to trade, all that trading stuff. So I'm gonna give you 3 reasons why I think the 15-minute chart is the best chart to trade on. These aren't just like your quick checklist video. These are like legitimate reasons. And if you're already trading on lower time frames, like the 3-minute, the 5-minute, this is gonna help you correct a lot of the mistakes that you're probably making today. So before we get into it, go ahead and hit the subscribe button, hit the notification bell. Guys, I'm super passionate about finance and helping people in my generation, helping people that look like me and helping everybody else as well. Let's go ahead and jump into it. Open up my screen and we're gonna start recording. All right, so we're on Tradingview. First and foremost, let's start with that. If you're new to Tradingview, this is a free tool. There are paid tiers. You can just go to tradingview.com like I have now, tradingview.com. You can make an account. I'm already logged in to my account. Go down and whichever way you want to get to your last saved layout, you can make a layout here. If you don't have a saved layout, it's really easy to make a new one. Just hit this drop down arrow. Here I have one called subscribe, but you can just hit new layout. It'll make a new layout, right? Just like this. The symbol, what we're looking at right now is ES. If you want to change the symbol, Tradingview, go to the top left of your screen, hit this drop down here. You can do ES. You can also use SPY. It doesn't really matter. We're going to use ES futures. We're not going to talk about why in this video. I've talked about it in other videos, but basically this is what the big boys trade. The chart looks just like SPY, okay? And that's all that really matters. To change time frames in Tradingview, right? I don't have my hands on the keyboard right now. If I hit 3, goes to 3-minute, hit enter, I go to 3-minute time interval. Hit 5 minutes, hit enter, goes to the 5-minute interval. If I type in 15, goes to 15 minutes. If I type in 1D, it goes to 1 day, get the 1 day interval. And if I hit 1.5, we go back to the 15-minute interval. If I want to change the size of my candlesticks, I can put my mouse over into the y-axis here, click down and scale, and we'll be able to change this. And if I want to change my time frames, I can just scroll my trackpad. I'm on a Mac right now, so obviously use your mouse wheel if you're on Windows, etc. Cool. So enough of how to set up Tradingview. I know some of you guys are new to this, so I did want to walk through that. We're on the 15-minute time interval, and I want to talk about why this is so important. I've talked about support and resistance levels in my other videos and why they're so important for trading. And let's actually look at a pretty clear pivot. So first and foremost, what is a pivot, right? When you're looking at candlesticks, a pivot is essentially think at an extension at the end of the zone, like we see here, right? So we had a candlestick with a bottom wick, and we'll zoom into this quite a bit, with a bottom wick clearly at the outside of this range. So what is the range? Well, there's a few ranges that we might see here, right? There's certainly the bottom of this range here, and we'll do, I think it's option H on my Mac. Yep. There's maybe a few other ranges. So depending on, if we look at the last 2 days, it looks like the top of the range might actually be here. We're looking at from this day, here's the overnight session from Thursday to Friday. And then here is, or actually this is Wednesday. Oh wow, Thursday was super low volume. Oh, that's because it was a holiday. It was Thanksgiving, guys. But yeah, so we have Wednesday, overnight session, and then Friday, right? So we had this zone here, this range, and we have this pivot here. So let's actually just zoom in on how this might have played out. If I replay this bar, we'll use the replay function, and we're gonna replay it from here. And let's go ahead and go forward a bar. So we see we have it come down there, go forward a bar, opens and closes. Okay, so we have what looks like a hammer candle, maybe even like a doji, right? But more of a hammer, a green doji candle. We'll talk about maybe what those candles are in a different video. Here, next candle closes, kind of a green, almost engulfing candle to the upside. So if I would have taken a trade here, let's see what happens. Let's say I take a trade at the worst time in this time frame. We're at 40.34.75 here, where this candle closes. So we'll do option H. We'll highlight the entry for this trade here in yellow. Go forward, opens, closes, go forward, open, closes, forward, and we'll actually just let this play out. All right, and then the market closes. So the worst entry on this trade, and that's what we're actually looking at here, would have been, go from here to here, right? So we would have opened at 40.34, would have got 5 points to 40.39. On the 15-minute, now you're probably thinking, Forrest, how would I have known to exit here? Well, one is that we do have this coming up to a resistance here. You'll also notice that where I put this exit, where the top of this wick is, actually is the resistance level here, right? So you would definitely have this marked as resistance, right? I would have drawn that dynamic level, and we exited right at that level. Go figure. So clearly marked exit there, and this is the worst trade, right? A better trade, if I were to go back and replayed this, I probably would have entered on this green doji here. Now, if we zoom out to the rest of our chart here and think about where we are in the macro environment, we had a really strong rejection off of this level, which I'm sure coincides with some other levels, but we won't go too far back in time. We'll go back here. Bear with me, guys. This is exactly what it's like, by the way, when you're actually doing this analysis. You notice something, you check, you verify. You see something that looks like a signal, check, you verify, right? We trust but verify. You probably heard that in other contexts. We trust but verify, right? We always want to understand, okay, I see something here, what else is happening? I would have entered, and let's go back to here, hit replay, go from here, right? We'll go forward, forward. So here's where I would have entered. If I wanted to get really, really risky, I could have entered here. Now this is actually the open of the market, which is a little bit different, but let's act like this isn't the open of the market. Let's act like this is just normal price action behavior. And it actually doesn't matter. You'll see these same setups in every time frame: market open, middle of the day, first hour and a half, power hour, whatever you want to call it. We see another pivot here as well, right? Exactly what I'm talking about in pre-market, right? On the 15-minute chart. And the reason the 15-minute chart is so good at giving confirmation is that if I would have entered on the close of this candle from 40.29 up to 40.39, right, that would have been a 10-point trade there, right? So if I'm trading futures, if I'm trading ES futures in particular, $500, $50 a point, you're trading multiple contracts, obviously that's more money. If you're trading options, easily could be a 50% trade if you enter, zeros at the right time. Now in our current environment, VIX is pretty low, so it was kind of a grind up there as we saw, but you can see how the 15-minute chart gives you really, really strong confirmation. Let's look at the same time frame on the 3-minute. When you go to the 3-minute, you have this small little bounce. We have a green candle, green candle, green candle, and then you have this really strong wick down here, right, which is a part of, see what time frame that is. This is actually at 9:33. So we go back to the 15. 9:33 is within this candle, right? That strong wick, which looks a little bit almost bearish on the 3-minute, is actually a part of a green doji on the 15. So the interpretation of the information is entirely different when you're on these larger time frames, and that's what's so important about the 15-minute chart, is you have a completely different perspective of the information. More important about the 15-minute chart, especially when you're doing volume analysis, right? And I'm a VPA trader. A guy I follow, and I'll give him a shout out. We're no way affiliated, but I have a lot of respect for him, is Options Millionaire. Check out his YouTube channel. You just type in Options Millionaire. I'm in his community. Find me in there talking about trades every day. Obviously, I'm working on my own community, but yeah, I am a VPA trader. I learned a lot from him. I've applied it to my trading style, in addition to being a little bit of a technical trader. But when you look at volume, especially on these higher time frames, it applies much more, right? When we talk about accumulation and distribution, which I'll talk about in some other videos, then the signal to confirmation value is much higher. So let's go back to the 15-minute. So I've kind of explained there through an example why these are so powerful. Let's just look at some other clear pivots. Clear pivot here at 4,000. Let's call it, this is actually 4,003. Go ahead and give this a mark. If you would have took a trade there off the 15 and then exited at the top of the next, again, the same range. Look at this, same levels applying over and over again, guys. This was back on Wednesday. You would have exited at the top of this range, right? So we came up here, we sold off, some strong engulfing, came back up. There was a really fat doji there showing some indecision, but then we get a little bit weak to the upside. But if you would have exited up here, it's about a 34-point trade. And so from the bottom here, from 12:45 up to 14:15, 14:30, let's just call it an hour and 45 minutes. Not a bad trade. Let's do the same thing that we did before. Let's look at this time frame on the 3-minute. It may or may not look better. So this one's not as bad on the 3-minute. We actually have a really strong pivot on the 3-minute, but then we kind of see these 2 points here. We have this 1 point of strong weakness. I imagine here, this would have shook out probably 90% of people though. That's what's so tough about trading on these shorter time frames, is if you're looking at these all day, and it's really hard to separate mentally when you're looking at these time frames from what it's telling you, you would have been shaken out. 99% for a fact, right? If you're thinking like, oh, I would have held, no, you wouldn't. You would have been shaken out here. So, and we can actually see here, what was this time frame? This is 2 o'clock. So the 15-minute is going to do 3 things for you, and I told you I was going to give you 3 things. So I gave you some examples. Let's actually go through the list. Number 1, I'll actually stop recording my screen. I'll open up my list here. 1, it's going to allow you to trade less. I've talked about this a lot. When you trade less, you make better trades. When you trade less, You can use better analysis, which is going to give you stronger confirmation, right? And that's really the second point. So the first point is you're going to trade less. Trading less is one of the most critical things you need to do as a new trader. Number two, second thing that trading on 15 minutes is going to let you do is let you get better confirmation in trades. I can tell you this, a bug in my cup. Get out of here. Get out of here, bug. Confirmation is so important, right? You want follow through and confirmation. So whenever you see a signal in trading, you need to think of trading as, you know, I've got a dashboard of signals. I've got 1, 2, 3, 4 lights. I want 3 or 4 of my lights to flip from red to green. And when I have the majority of my signals are in the green, I take a trade. You don't want to say, oh my God, I see a head and shoulders, enter a trade. No, because for every time you see a head and shoulders that works out, you're going to see it fail. You want multiple signals if you're using technical analysis, if you're a VPA trader, if you're using MACD, whatever it is, you know, you need to think about, am I in a trend day, in a range day? You know, what are all the different factors and how do these patterns play out on these different days? And what is the convergence of these factors with other things that either correlate with what I'm trading, right? If you're looking at different currencies, the VIX, all these things apply. So trading on a slower time frame is going to really allow you to just ignore all of that. And you can just look at the price action and volume. Because you're looking at a slower time frame, it's going to mean much more. Think of the larger time frame as more like a big ship. It takes a long time to change. So if we see a bullish signal on a longer time frame, it's going up. And if you just only look at that longer time frame, you will ignore all the smaller movements. The third thing that it's going to do is you're going to focus on the longer time frames in general. So you can see how these all kind of come together. And I'm telling you this, guys, I'm making this video because this has helped me a lot as a trader as I work to become profitable. So many traders, and I think it attracts the type of people, I'm certainly the type of person, is you want to master the market, right? Your ego gets involved. You get so wrapped up with being able to call the next trade. You're talking to people online who are calling trades like, oh my God, they got this trade. They got this trade. It's like, why didn't I see that one? Why didn't I see that one? Why didn't I see this one? And I can tell you that most of it is smoke and mirrors, right? Most of the people who are calling winning trades are also calling losing trades, and they're not calling the losing trades, right? They're not speaking up when they're wrong. That's first and foremost. You need to ignore the noise. It's still valuable to be part of these communities, obviously, because you can learn from, okay, when they do call the winning trade, I can see how they were able to see that, and then I can apply that, you know, into my plan for the next one. But when you focus just on the longer time frames, you slow down, you're much more thoughtful of your trades, and you learn to think of trading more like gardening than some other fast-paced activity. I don't know. Thinking off the top of my head, I couldn't think of another analogy there, but think of trading like gardening, guys. Maybe that's all that needs to be said. If you think of trading like tending to a garden, I'm a huge plant guy. You can see I have plants. I have a ton of plants in my apartment. I have a ton of green in front of me too. It's a slow, consistent tending to something that will eventually bear fruit and bear fruit consistently. Eventually you'll have a magnificent harvest. We're going to be very philosophical, but I love that I'm thinking of this now because that's really what trading is, even when you're day trading, and I day trade every day. There's so many examples, and we get look at the chart that I just looked at. Look at the chart on your screen now. Pause this video, look at some charts, and look at the amount of money that you can make trading one time a day some days, right? Especially if you're trading zeros, which you shouldn't do, but if you are doing that anyways, you don't need to be making 4, 5, 6, doing all these scalps and stuff like that. You can have 1, 2, 100% trades, 300% trades, completely doable, easily, but only if you are hands off the keyboard most of the time and looking for those really strong confirmations on the 15-minute or the 30-minute or the 1 hour. There are people, guys, who swing trade and they're taking one trade a month. They're making way more money than you are right now. You need to think about that. Think about that statement. If you're not beating P&L wise people who are trading less than you and doing less than you, then why are you doing so much? Working harder in trading is not the answer. You know, trading is a mental activity. Physically do less, trade smarter, and you will make more money. That is it for this video, guys. I hope this helps at least one person. If it does help you, please let me know down in the comments. Please join my Discord community. I would love to have you there. We do free weekly webinars every single Sunday, minus, you know, holidays. Filming this weekend, I'm not doing one, but most Sundays I have a free webinar for new traders. And there's also a paid tier where I'll give access to my trades as well as coaching on a weekly basis for everybody in the paid tier. I just kicked that off. So we have foundational pricing. I would love to have you there. And in general, I'm always here to help. So if you want to shoot me a message, that is the best way to get to me. But ultimately, I hope you have a fantastic day. Let me know how I can improve this video. If there's something you're curious about that I left out, I will make a video on it. I'm here to help. My name is Forrest. I invest in stuff you should too. See you in the next one. Peace.